everyone. Welcome to Lunch Money Ngari. I'm Fatima Karan. It's, of course, a big news day. We've, of course, seen how the Cabinet has approved 100% FDI in single-brand retail, in certain facets, and aviation as well. Of course, this latest update that I'm getting right now, we've, of course, gotten that under approval. As we know, we also have 100% FDI in construction under the automatic route as well. We're going to get you more details on that, but Vikram, take us through what is happening with the markets with this.
Well, big breaking news happening right now. So the construction sector is going to be in focus. Like you mentioned, the Cabinet has approved 100% FDI in the construction sector. And of course, they've allowed foreign airlines to invest up to 49% in Air India. The breaking news right now is that the entire move that we've seen in the aviation sector by the government seem to be geared towards the stake sale of Air India. And as far as the latest move is concerned, 49% FDI has been approved into Air India. That's the big news. The government's fiscal deficit perhaps is top of mind right now, and they're looking at mopping up revenues, and this is one way of doing it. As far as FDI is concerned, big reforms coming in, whether you look at the retail space, the aviation space, construction, and now you're looking at what they're doing with Air India. 49% FDI has been approved into Air India. Construction sector, 100% FDI through the automatic route, and they're looking at allowing FDIs to invest in power exchanges through the primary market as well. That's a big announcement, allowing FPIs to allow participation through the FPI route in the power segment. They're allowing foreign airlines, of course, 49% stake into Air India. We will wait for more details to come in on this. But just ahead of earnings, we are looking at all the news coming in from the Cabinet, big decisions being taken. Let's go across to my friend here, Mayuresh Joshi, fund manager at Angel Broking. Mayuresh, perhaps you've had a chance to digest the big news, the breaking news that's coming in. First, let's tackle what's happening in the retail space, and then we'll look at the construction sector and what's happening in the aviation space as well. But do you think that the automatic route for 100% FDI in the retail sector is a big positive? Are we likely to see a lot of M&A action? We're seeing so many of these stocks react right now, whether you look at Zodiac or a CESC or an Indian Terrain, all of these are buzzing right now. They're climbing up quite significantly, but that's as far as immediate reactions are concerned. What do you think is the long-term perspective in the retail segment, considering this move by the government?
Afternoon, Vikram. I think a step in the positive direction by the government on both counts. A, in terms of mopping up revenues that can come through the automatic route. And B, I think for the retail sector as a whole, because I've been very, very bullish on the consumption theme, and because you've seen these organized retail space chains actually do well, yes, I think any move on this front should be very, very accretive as new players coming in. The only caveat here is the sourcing norms required for the 100% FDI and so on and so forth. So I think that piece probably needs to be looked in further detail. But for the listed retail players, I think the large construct here is the kind of expansion that they've already done over the past few years. The expansion plans are on the annual in a very constrained manner. So I think they're very, very conscious in terms of capital allocation, whether it be apparel or whether it be the food and the grocery chains that each of these listed players operates out of. If you look at the key parameters in terms of same sales stores growth, obviously I think Avenue Supermarts is way ahead in terms of competition, but the others are catching up as well. And though I think players like Spencer's will probably be able to eke out something on the EBITDA front, I think a few other players probably will look at margin expansion as more and more of these businesses probably can have further capital allocation, which has a multifold effect in terms of improving the return on equity as more equity starts coming through without substantial dilution in the earnings profile, and that deleveraging in their balance sheet, which probably also affects bottom line growth. So having said that, I think future retail trend is something that looks very, very interesting. Avenue Supermarts, obviously, I think from a valuation perspective is a little bit expensive. But again, I think it's a very interesting story to hold on to for investors who already own the stock.
All right, so exciting indeed, Mayuresh. Of course, the timing of this announcement also just comes ahead of the Prime Minister visiting Davos for that CEO meet. The whole objective is to also really show that we are making all efforts to boost economic growth, as well as, of course, the prospect of growth itself, pushing it out, as well as creating jobs right here in India, which is something that we've been talking about throughout. How do you think things are going to settle out post the initial euphoria? Because there are still concerns, of course, about ease of doing business, other so-called, I guess, concerns in terms of how businesses are really working on the ground. How do you think an announcement like this is actually really going to be panning out realistically in terms of timelines? We can, of course, see some of it all adding to the excitement that we're seeing with certain stocks buzzing. But from an economic perspective, for someone who actually looks at, in companies as well as how the investment cycles work, how do you think it's really going to pan out?
So, afternoon, Fatima. As I mentioned in the point with Vikram, I think the fine print probably needs to be studied in greater detail in terms of how the sourcing can probably happen, even if 100% FDI is allowed. How much sourcing can probably come through, in which components it comes through. And all that is very, very critical. Again, I think in terms of the entire piece being put together on how they can probably expand. And as you rightly pointed out, I think the ease of probably doing businesses. I think the government is doing all the necessary steps that are required in terms of clearances, in terms of incorporation that a lot of these companies need to go through in terms of regulatory registrations, legislative clearances as well. So to that bit, I think the efforts of the government will fructify in the long period. And as these measures start taking place, I'm pretty sure that I think the sector in general should do well.
Mayuresh has been very patiently waiting with us all through the breaking news that we've been tracking. But Mayuresh, when you look at Bajaj Auto, you see the December sales numbers. Those have been very promising. In fact, the highest in a span of 7 years or so. But with the promise of their executive bikes and the market share of 24% that they are targeting, where does this come in your pecking order, Bajaj Auto, within the two-wheeler space and in the auto sector as a whole?
So the two-wheeler space looks very interesting, Vikram, and clearly if you look at the kind of new launches, not just Bajaj, but I think a lot of the other players are also expected to get through. I think it's going to be interesting times for all of them. Now again, I think one really needs to understand that the volume growth has been quite significant on a year-on-year basis, at least as this quarter is concerned. But largely, I think the quarter-on-quarter growth will definitely lag for all players within the two-wheeler space, and you're going to see a significant dip in terms of volumes. Realizations might just hold up, and margins might also remain stable quarter-on-quarter, because you've seen raw material inflation actually eat into the margins without a substantial offset happening in similar fashion on the top line of the realization front. Having said that, again, I think the pecking order again remains the same for me. I think it's Hero MotoCorp because of the rural presence that it has got. The numbers, as I said, on the quarter-on-quarter basis will be drastically lower for all two-wheeler players. I think the leverage because of the rural and the agrarian economy actually getting a kickstart from the government in the quarters to come with the budget, again, significant allocations expected. Hero MotoCorp should hold out, and Bajaj Auto probably in terms of valuation stack up appears second best.
Mayuresh, just very quickly, because we're completely out of time, but I wanted to ask you this earlier. We'd seen that the kind of spiking that we're seeing in the single brand retail stocks on the back of that announcement from the cabinet. A counterpoint, of course, had been that, perhaps it doesn't really make sense for some of these companies because it actually means that competition is going to be coming faster. As an investor that's looking at these stocks, what is your take on it?
No, so I think competition will always be the case, Fatima. But the whole point in terms of creating synergies and creating the back end is something where substantial investment need to be done. And to understand the Indian ecosystem, I think takes a long period of time. We had seen that years back with a lot of auto ancillary players, and a few players did try that hand in that. But I think it's a very difficult market to penetrate. So I think the established players are already there in terms of size. It's a capital intensive business. The returns come back ended. And even if you look at the current structure, whether it's future retail through the FBP store, whether you're talking of Trent through West Side, you're probably looking at a lot of brands actually being there already. So I think the return on capital employed is significantly higher as these brands keep on coming into the stores. So largely, I think it's a positive move, but I think ultimately, I think the retail players who are in the existing businesses are going to see the accrued benefits also come through of all the efforts that they've put in terms of capital allocation, which will give them the desired ROCE in a very elongated fashion and extend that further in terms of the earnings profile as well. So yes, I think selectively, I think retail stocks do appear very, very good even at these current levels.
Mayuresh, always a pleasure talking to you. Thanks so much for joining us on Lunch Money this afternoon, an action-packed afternoon edition of the show. We'll take a small break right now, and after that, even as we're seeing the cuts in the markets,